Tesla deliveries crushed expectations by 74,000 units, and the stock dropped 7.5%. What's going on here? Is this a drip to buy, or the start of something bigger? 480,000 deliveries, 18% above the consensus. That's a beat on paper. But the market sold the news. This is what traders call buy the rumor, sell the news. Episode 6, a full technical breakdown of the TSE pullback. 4 dimensions, 1 complete picture. Let's dive in. Start with the weekly chart for context. From last year's lows to this year's highs, TSLA rallied over 70%. This pullback, in the grand scheme, is still within a larger uptrend. The 20-week simple moving average sits around 380, the 50-week around 340. Price is still above both, and both averages are still pointing up. The weekly structure remains bullish. Connecting the major swing lows gives us this uptrend line, currently around $370. As long as weekly closes stay above this line, the larger uptrend remains intact. Weekly RSI is around 52. It's come off the toil from overbought, but it's nowhere near oversold. On the weekly looking pullback, this looks like a normal pullback, not a panic. On the volume side, up weeks had expanding volume and pullback weeks had contracting volume, healthy behavior. But this week's bar has higher volume, which tells us participation and disagreement are picking up. Weekly takeaway. The big picture uptrend is still there. But the higher volume on this pullback tells us to pay attention. The 370 to 380 zone is the line in the sand. Transition. Now zoom into the daily chart, where the details live. We'll look at moving averages, support, resistance, and Fibonacci. 4 moving averages to watch. The 20-day at 401.55 is rolling over. The 50-day at 404.7 is flattening out. The 100-day at 397.83 is nearby support. And the 200-day at 417 is resistance above. Notice, price is now slightly below the 100-day moving average. This is a test. If price recovers back above it in the next session or two, the support holds. If it stays below, the next level comes into play. Daily support levels from top to bottom. First, 397, the 100-day MSA. Second, 389, the recent swing low. Third, 380, a psychological round number. And fourth, 370, the trend line we talked about. On the resistance side, 401, the 20-day MSA. 405, the 50-day MSA. 417, the 200-day MSA, and 425, the prior high area where call options are concentrated. Fibonacci analysis, Fibonacci traction from the 337 swing low to the 453 swing high. The 50% retraction level is around $395. And look, current price is right there at the 50% level. This is a classic retraction zone. Daily takeaway, price is sitting right on the 50% fib level. It's dipped below the 100-day moving average, and volatility is rising. This is a decision point. Now look at volume. On July 2nd, the stock traded nearly 74 million shares, about 1.5 times the 20-day average. Higher volume on a down day tells us there was strong participation on the sell side. Here's the comparison that matters. The big up day on June 29th did about 58 million shares. The down day on July 2nd did 74 million. More volume on the way down than on the way up. Candlestock pattern. The candle itself tells a story. Large bearish body, small wigs, open near the high and close near the low. This means sellers were in control from start to finish. And notice the gap. It gapped up on the good news, then sold off the entire day. This is the classic buy the rumor, sell the news pattern in action. Volume takeaway. Elevated volume on the decline. Sellers more active than buyers, and a textbook sell the news pattern. Short term, the bows have the momentum. Daily RSI is around 39, getting close to the 30 level that traders typically call oversold. Oversold doesn't mean it can't go lower, but it means downward momentum is starting to get stretched. MACD is showing red bars that are still growing, which means bearish momentum is still increasing. On this indicator, we haven't seen a turn yet. The stochastic oscillator is already in the lower zone. Short term, the move is getting stretched, and some sign of bounce or consolidation would be normal from here. Putting it together, short-term indicators are getting stretched, so a bounce wouldn't be surprising. But medium-term momentum is still pointing down, so any bounce might not have legs. Divergence setup. Here's what to watch for. If price drops towards 380 but RSI doesn't make a new low, that creates what's called bullish diversion. That would be a higher quality setup than just buying at support. Indicator takeaway. Medium-term momentum is still bearish, short-term is getting stretched. The high-quality setup would be a test of the 380 area with bullish divergence. So what do you actually do? 3 different approaches for 3 different risk profiles. Pick the one that matches your style, then follow its rules. Approach 1, scale in. Build a position between 380 and 390, stop loss below 370, first target around 405. For active traders only, and only if you manage risk strictly. This is an example, not advice. But be clear, scaling in on the way down carries higher risk. You can easily catch a falling knife. If you choose this approach, The stop loss is not optional, it's the rule. Approach 2. Wait for confirmation. Let price reclaim the 20-day moving average with volume, then consider getting in. You miss the exact bottom, but you get a higher probability setup. Approach 3. Stay patient. Do nothing. Wait for a clear setup to emerge. This is what I recommend for most people. Missing a trade doesn't cost you money. A bad trade does. There's no single best approach. The best one is the one that fits your risk tolerance and your rules. The important thing is to pick one and stick to its discipline. Let's wrap it up. Weekly picture, uptrack still intact, 370 to 380 is the key zone. Daily, sitting right at the 50% fib below the 100-day EMS. Volume higher on the decline. Indicators, medium-term weak, short-term stretched. Remember, wolves don't chase every movement. They observe, they wait, and they act only when the odds are in their favor. Trading rewards patience, not activity. Next episode, we go deeper into volume price analysis. What does rising volume on an update really mean? What about shrinking volume on a pullback? We break down the complete framework. Quick question. Where do you think TSA finds its next support? 380? Lower? Drop your technical read in the comments below. If you found this technical breakdown useful, hit the like button and subscribe. I'm Trade Wolf. Stay patient, stay disciplined. See you in the next one.